Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast, The Week That Was. The rally in global assets faded this week as sentiments remained weak on worries about the future path of interest rates ahead of the US FOMC meet next week. After scaling all-time highs over the previous week, Indian equities consolidated this week in line with other emerging market peers but underperformed major Asian peers like the Chinese, Hong Kong and Japanese equities. After a positive start to the week, the Nifty index traded sideways for most part of the week to end lower by 0.4%. Broader markets outperformed Nifty with the mid-cap index and small-cap index up 0.4% for the week, respectively. Among sectors, domestic-focused sectors remained resilient with capital goods, FMCG and banks recording gains of over 1%, while global-focused sectors underperformed with IT and pharma recording losses of 4% and 2%, respectively. The Indian fixed income market came under pressure after the RBI's monetary policy announcements. While the decision to raise the repo rate by 35 basis points was in line with the consensus expectations, the decision to remain focused on withdrawal of accommodation was contrary to market expectations. For the week, the 10-year Indian government bond yield rose by 8 basis points to 7.3%, while the 3-year and 5-year Indian government bond yields rose by 6 basis points and 12 basis points, respectively. The INR depreciated during the week as elevated demand for US dollars by local corporates and foreign investor outflows pressurized the INR. For the week, the INR fell 1.1% to close at 82.2 per dollar. During the week, the RBI concluded its December Monetary Policy Committee meeting. Members voted 5:1 in favor of raising the repo rate by 35 basis points to 6.25%. Consequently, the standing deposit facility rate was adjusted to 6% and the marginal standing facility and bank rate was adjusted to 6.5%. The MPC also decided to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. On growth and inflation projections, the RBI lowered its growth forecast for fiscal year 23, citing accentuated headwinds from protracted geopolitical tensions, tightening global financial conditions, and slowing external demand. Gross domestic product is forecasted to grow at 6.8% in fiscal year 23, with third quarter growth at 4.4% and fourth quarter growth at 4.2%. RBI retained its average inflation forecast for fiscal 23 at 6.7%, with third quarter average inflation at 6.6%, fourth quarter inflation at 5.9%, with risks evenly balanced. CPI inflation forecast for first quarter of fiscal year 24 is projected at 5% and for the second quarter is projected at 5.4% on the assumption of a normal monsoon. Over the coming week, all eyes will be on the US Fed policy meet. Consensus expects US Fed to lower the size of rate hikes to 50 basis points from the 75 basis points hike over the past 4 meetings. A hawkish policy guidance could keep the market volatility high for the coming week. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.